Alright guys, welcome to the next topic, which is called liquidity. And this advanced liquidity is key, paramount for the next steps for the strategy. In fact, without liquidity, this strategy will be extremely unuseful, not useful at all, right? Because we need to perceive where the money is located, and that's what liquidity will help us to understand. Let's see what it is. So the liquidity, it is the liquidity held. Let's understand liquidity as money. Okay, liquidity is, in other words, money accumulated in market. Okay, so once I said liquidity, or when I said liquidity in the past, or when I'm gonna keep using the word liquidity, I'm referring to money trapped in market or money accumulated in the market that should be efficient by the price. Okay, so it is the liquidity held by large financial institutions, and this liquidity exists above highs and below lows in the market. Okay, liquidity is also included in the stop losses of retail traders. The money of large financial institutions is positioned through buy stops or sell stops, which act as a liquidity pools, if you have heard that word before, for smart money to manipulate and execute orders. Okay, you have listened about those concepts in other different strategies, liquidity pools. People may have different names. Even there are some other mentors that change a little bit the names to make it more personalized, which is totally fine, right? It's totally fine. But in this case, I just stick with what you really need to know. And it's just liquidity means money. As simple as that, right? Sorry for the mistake here. All right. So in other words, all the above, all the highs and all the lows you see in the market, they are money accumulated, right? Above every high and below every low, there is money trapped. Okay, there are orders that are not that are there are positions from high institutions or really huge institutions that had positions there. That's why the price is moving, because, for example, or the price to go down here is because, I don't know, a bank sell, I don't know, X amount of $1 million, and then they have, and then another bank or hedge funds buy a little bit more, but then the same bank put a second order, and that's why the price moved down, and so on. So what does it mean? They have their stop losses up here. So remember, this dynamic of the market is someone buys, others sell. The one who has more money, in other words, can manipulate the market. That's why, for example, in cryptos or those fake meme coins and all this stuff, when the creators of the project has practically the 90% of the money, they can simply manipulate the currency or that market or that coin. And that's why you have seen those scenarios when you see push. When they push, is they put a lot of money on the market, they push, they buy a lot, and then when the coin is in the highest part or where it's very expensive, they just take all the money out and they let the other people lose. Right? This is the dynamic. You can understand it through cryptos, but okay, this is how it works in Forex now. With that concept, more of a clearer concept about liquidity, now let's see how it works. Okay, so I want you now to change your perception of the market, and you see every high as money. So there is money trapped in every part of the market. So highs are money, the high above the highs are money, below the lows are money. As simple as that. And in this drawing, I'm just doing this, just like highlighting that. Have you ever thought about that? For example, that when in the very beginning when we were learning strategies, trading strategies, they said to us that there were the double tops and the triple bottoms and all the stuff. And for some strange reason, the price respected, right? Which means, in other words, the money was just there. The money was just there. Perfect. And there is where I'm just like highlighting the liquidity of the market. Now, what happened from this point now? You already see all this money, okay? And you also can see that this is a bullish trend. Okay, what happened here? Many of the traders that do not know too much about these concepts, they think that these patterns as triple tops or like a head and shoulders pattern or all the stuff work, that, but unfortunately they don't, right? Because they do not consider, for example, the direction of the market in this case, which is here. This example that we're seeing here is bullish. So they're putting orders, selling orders, for example. And what is the regular trader or retail trader doing now? They're just putting orders here, and there is also where we have our stop loss, correct? So that's the money we're allowed to risk. But the price simply does what it needs to do, which is like give us a little bit of joy, which is has like a certain type of reaction. You get a little bit happy or excited, then it take your first stop loss, but you see a second, I don't know, top, you put another sell, third one, and then at the end you lose much more than you were expecting, just because you didn't have clear the direction of the market, and also you didn't have like very risk management rules as well, right? So this is how the liquidity works, and we need to be very aware not to be trapped in those liquidity pools or where liquidity is located, because if you are where the liquidity is, you would lose. Simple as that, my friends. Okay, perfect. So I'm gonna give you a golden nugget, okay, for this. Before taking any entry, okay, there must be a prior liquidity as a confirmation for executing a trade, okay, at that level. So for example, this is something I mentioned in the previous videos and of this course, and it is that if there is liquidity before, for example, here we're watching an example of an extreme or an original, right, an order block. Now we're seeing the next. I want us to pay attention to the next. Let's try to apply some of the knowledge we have acquired on the course. If we have seen here, this we already know that this is our, like, this is the swing low, then the swing high is created, perfect. Then we'll have here a boss. We will have here a boss, for example, yes. And then we have like an order here, yes, as we have learned. Also, we have here a boss, but let's say this boss is like a 4-hour, as an example, a 4-hour boss, which is a higher temp. Okay, now you already know that we can refine the order blocks. And for example, you see this order block, which is marked here, should be a 1-hour order block, for example, this one. Nice. Well, what happened now? Based on the explanation, we would say, okay, this could be a boss, but also this could be a boss, this boss here. Not a boss, sorry. It could be a decisional, excuse me. Okay, this also could be a decisional zone. Remember? The decisional, the flip, when the movement, when the price movement could, when the price could change its direction. So we have now 2 zones. We have this one. We have 3 zones. Okay, perfect. Now I'm pretty sure that some of the questions that you had when we were like learning about the order blocks, imbalances, supply and demand zones were all right. We already know which are the order blocks. They have probably reaction, but which is like the one who has the most possible reaction. That's why this golden nugget is that important. Okay, in this case, the best order block would, what do you think would be like number? Let's put a number, right? Could it be the number 1, which is this one I'm gonna put here? Wait, this one, the number 1 with 1 hour, or the number 2, the one we have here, or the number 3? What do you think? Okay, taking into account this concept of liquidity, it will be the number 1. Okay, why? Because all these lows that are here are considered as liquidity. On this video, we're gonna see why. Lower below every low, it's money. Remember that. So under this low, for example, there is a, I don't know, a bank or a hedge fund company with this stop loss. And here there is another company with this stop loss, correct? They're just trading the market as we do, but they do it in a different scale with millions of dollars or pounds or whatever, right? So this is important. This is important for us to recognize where the liquidity is. So if we see this liquidity, there is highly probability of the market to take those stop losses. I'm just already like highlighting here some of those areas. As you can see, the price may go there and took all the liquidity, right? And now look, I'm marking here the liquidity. You see, and now what happened? This is the stop loss of a hedge funds. This is a stop loss of a bank. Now, what happened with, I don't know, George or Kathy, the average trader, or me, Manuel, right? The average trader, when we were learning this strategy. Remember that we learned about the trend lines, right? And if this is a bullish trend line, well, 1 touch, 2nd touch, in the 3rd touch, we will expect here a possible reaction, right? It means that the price may go down here and it could going up, right? This is what we have learned through all the YouTube videos and also through some books online, whatever. Yes, all of this is liquidity trap because now we are where the liquidity is located, which means we now are part of our liquidity, and now all of this trend line is full of money. Now look what happens. As a small reaction, we're happy, and boom, takes all the liquidity. Now by this point, when the market goes down, we thought, oh no, it's bearish. And now we start selling. And this is the dynamic I have trying to share with you during this course, right? It's just like changing the concept of the market, right? Now, everything that we have seen here, right, has been mitigated now. This liquidity was mitigated. This liquidity here was mitigated. All this trend was mitigated as well. And now the price is efficient, can enter in a correct zone. In this case, it will be the 1 hour extreme order block. And then it could continue with the direction of the market, which is bullish, right? Important, extremely important, right? And I need you to have a time to think and reflect about this, because once you understand this, market gets extremely clear. All right, golden nugget number one. This is the golden nugget number two. This is in regards to the decisional, okay? So when the price creates a break of structure or a bust with the candlestick wick, it's missing here the candlestick wick, or the candle wick, okay? It should not be used to determine a decisional zone. Remember that it is called, I have emphasized this in previous videos, but I have to emphasize it now again. If this is a break of structure, it's because it's with the body of a candle. And now, for example, what I'm highlighting in this example is that here, where is the zone? Some people would say, all right, Manuel, this is already a bust, right? Why? Because look, the price just took the liquidity with this huge candle, right? And it means that the price is already taking all of that, right? All the money. Yes, probably the price has already taken money with this candle, but it doesn't mean it's a bust. It's a no bust, right? No bust. People would say, all right, so because it's a bust, they then unfortunately make the wrong decision of select, for example, this one as the decisional, right? Why is that wrong? It's not already a bust. It's not already a bust. So this cannot be the decisional, correct? Not yet a bust. So what we have to do is wait enough, be patient enough to see a break of structure, a proper break of structure with a body candle, which is here. After this, with this body of the candle, we would say, all right, perfect. It has done a proper break of structure. Now we can determine the decisional, and remember that we determine the decisional by saying the next. Is there a very clear attempt of downtrend or uptrend, depending on the market? In this case, it will be bullish. So we will need to see very clear and evident downtrend movement, which is very evident. This candle is a selling candle after the bust, before the bust. We have the bust break of structure, and then we see a very clear evident candle, okay? So the bust, once the bust is made, the prior candle who makes the evident attempt of reaction or going downtrend or going uptrend, depending on the direction of the market. In this case, it will be an downtrend, okay? That will be our decisional candle, and that will be the one we will take into consideration as a decisional, okay? Now pay attention to the next. In this, we will have the next. Okay, we just determined this will be the decisional, and look at the next. This is a low, right? And look, this is a low. Shall I ask a question? Remember, what did I say about the lows and the highs? What is under low? Money, correct. So here is money, here is money, right? Here as well. So this is liquidity. What does it mean? That this decisional has high probability of reaction. Why? Because further, days after, minutes after, the price may go down here. It takes the liquidity of this lower or of these lows, and then in the decisional, continue with the reaction. Why? Because now the price is efficient. Okay, this is another important key for you to know and understand. Okay, perfect. And now I think I have a third one, if I'm not mistaken. Let me check. Oh no, this is again, it's the same explanation about the one we have said of the break of structure. Okay, so a valid bust must confirm by the candle body closure beyond the structure, right? And this provides a stronger confirmation and increases the reliability of using that area as a decisional zone for entries. So this is just like a small golden nugget about decisional. Why did I decided to put it here with the liquidity? It's because after the liquidity is that you confirm a clear decisional. In the last class, I just said to you, find decisionals, but I never tell you how to classify a proper decisional. And with once you already understand a clear attempt of going downtrend or uptrend, okay, of the market, and you say, okay, this could be the decisional, then the next step you have to see, is there liquidity under that decisional? If the answer is yes, it's probable decisional won't work at all. Why? Because the liquidity below that decisional could be taken. So let's see this example. You see this red zone, which is marked here, okay? we're gonna assume that this is the decisional area. Sorry, the break of structure. Here it is the liquidity. This is the swing high. All of this. Okay. This here we can confirm that here is a boss break of structure. Yes, break of structure. Now, what happened in this area? After we have this candle, which breaks with the body, now we have to look for the prior candle, which makes an clear and evident movement downtrend, right? So which will be the next. Let me put it more beautiful. It will be this one. I think you have already spotted. With this one. This will be the decisional, right? This will be the decisional. Why? We have a clear and evident attempt of going downtrend prior the breakup structure. Memorize this and say 100 times so you can recognize proper a decisional. So is there a clear and evident downtrend, right, prior the breakup structure? The answer is yes. So this will be the decisional. So according to the theory, this decisional is 100% correct and legit because look, then the price after the breakup structure, the price enter again in this decisional and keep pushing up, right? So it's a valid, legit, correct. However, the price has left the next, which is lower lows, not lower lows, has left lows here. Okay, let me check and let me show you. The price has left this low and then left this low. And then we have another low here. When we see this type of lows very close to the decisional zone, it means that that's liquidity, correct? And it invalidates our decisional, okay? Let's say, when I say invalidate, it doesn't mean that you cannot use it in the future. No. The thing is you need a confirmation to use that decisional, but confirmations and when to enter to an order, we're gonna see that order, okay? But when you see liquidity before a decisional, you should think twice if taking that decisional because this is also a trend line. Here is people like waiting. People would take, when we were like very new in the trading, we were marking this type of lines, trend lines, correct? And we were basing our decisions on that type of trend line. When we were that new, we paid the price of being new by not understanding correct the market, right? So if a person who just started on trading can see this, it means one thing, you're seeing run, right? Because if a new person sees this, you need to see beyond that. And that's why the liquidity or this explanation or this topic helps us, okay? Now, liquidity is here. We already know that this order block is not like so precise. So what is the next step? What will be the decisional? In this case, there's no more decisionals. So we're gonna take as a consideration the extreme, which is this one. This is extreme. The extreme is already refined because the extreme goes from this point, which is marked, to here, which is marked here. It will be like this could be the complete order block, but in the example is already refined because this is also liquidity, you see, in small time frames. So here we can see much more clearer. This is how can we determine if we select or not to select a proper decisional. But that's why in the previous video, I asked you to 20 examples of decisionals with the advanced market structure, because once to recognize where the decisional is located, extreme is very easy to recognize. But when you recognize the decisional, the next step is being more analytic and then find it if there is liquidity before or below or up as well at decisional, and then you take decisions. That's why it's called decisional. Correct? Nice. Golden nugget. Let's keep moving. All right. Now let's go to the advanced liquidity type. So if you feel this is enough for you in this video, I will ask you to pause, watch the first part of the video again, digest it, and then keep with the next, because this is liquidity. I just decided to make it just full length video, but we're gonna see the different types of liquidity. We're gonna see 4 types of liquidity, which are the most relevant, the most important, and it's a lot of information as well. Okay, so you ready? Let's go. Now we have the first type of liquidity, which is called the double tops, double bottoms, triple tops, triple bottoms, all the different types. You have listened like support and resistant areas. You have never been listening to me saying any of those concepts because, well, it's not part of the language of this strategy or methodology. And also it's because that's the first concepts we learn, which is not bad, which is something we need to learn at the very beginning. But as we get advanced and more mature in trading, then we have to recognize that some things do not work. And those are the things that don't work. okay, patterns. Now, it is better to trade against the double tops in a bullish trend. Listen to this. It is better to trade against of a double tops, which is a selling pattern in a bullish trend. Okay, why? Because the price is more likely to react and neutralize those liquidity zones. Additionally, analyzing the higher time frames helps to confirm the overall market direction, increasing the probability of successful trades. Perfect. So that's why, in other words, again, I won't get tired of repeating this, because everything I have taught you is because of a reason. This is an example of a bullish trend. We have a clear range here. So here we have here a strong low, right? A strong low is here. And then we have a strong high here. Sorry, a weak high here. Perfect. What happened? People would see, for example, when people see this huge movement going down, right? What do they think, or what have we thought before understanding these concepts? Well, it's bearish, right? We have to sell. This is the first type of liquidity called double bottoms. If we are in a bullish range, remember that the range is bullish because it respects the strong low. Okay, if it respects our strong low, let me write it here, strong low. If the price respects this, there's no way that we keep selling or going against the trend even more in these discount areas. If this is a discount area, you're crazy or not knowing this, okay, these concepts, this strategy, if you start selling. We can sell, yes, but up here in the premium zones, here, you already know this, right? Here is you have like good probabilities of sell because you are in a premium zone, but never ever in a discount zone. The problem is that when we are new on the trading, we think we start like realizing that we have to sell, but when the price is already in the discount area, which means totally the opposite. We have to buy, right? And this is why when people realize this huge movement, we start thinking on sell, and people start putting here orders. So they put here a double top order, for example. They take and here is when the price gets much more annoying, extremely annoying. I know every one of us has been in those type of orders, which the price just makes small candles, and sometimes it has a small reaction, and then we're happy, but then it has a next one, which is like contrary, has the same size of the previous one. We start getting extremely anxious because that creates anxiety. And then you put another order here, another order, and then you change your mind and say, okay, what? I'm gonna put another because here's the next double top, or here because it's the next triple top or double top, whatever. And then you see that you have lost 10, 15, all your account, right? Because you have trained against the trend line. But it's not what the people said on TikTok or Instagram. No, it's just because you have traded against the full range. Okay, that's the first concept. Okay, hope that is clear. Perfect. Next, now we have the double tops and double bottoms. Oh, it's the same. So double bottoms, same story, but of course in a downtrend. Okay. We have now an example of bearish range, okay, downtrend range. And again, when the price goes up here, people start realizing that let's go back to the example we were talking about. People is putting here double tops. People sell here. It's not in a discount area or in a premium area, so it's still in the discount part. Take the liquidity. When they see this huge impulse, they change their mind. It respected the strong high, which means it's still bearish. And here's when we have to sell. And people start seeing the next, oh, look, here is a resistance zone or support zone. I don't know how to say it. So a support zone, and they put a support or double button or triple button, 1, 2, 3 touches. So the 3 touches that we can win, 1, 2, 3, and then boom, stop loss. Okay, next point. Here we're gonna put another buy limit. They take it out. And then when they realize they don't have money. So it's the same thing, but upwards, right? So, or in reverse, okay? Excellent. So we need to be extremely picky about how we determine a range when we understand that the premium and discount zone, because it's fundamental. All right, now we have second type of liquidity or advanced liquidity is called inducements, okay? Inducements occurs when the price fails to reach the point, okay? And instead creates structure breaks along the way. Okay, eventually price returns to the point, grabs the liquidity, and then moves in anticipated direction. Inducement serves as a liquidity trap, and it means enticing the early traders before the smart money executes the real move. Okay, we need to be aware of the next, which is the inducement. I struggle a lot with this type of liquidity personally because I was so impatient that, like, as a professional, I was a teacher, so I think because of my profession I was like super used to being right always, and I struggle a lot with that because I always wanted to be right, but the market has taught me that it's not that you want to be right, it's simply you need to be patient. And for example, sometimes this type of liquidity refers to the price. You have here a decisional or an order block, which is marked here, right? The price may, you as you were expecting, the price goes down, and you were waiting here for a buy limit or just simply to execute your order, but then the price fails. For example, it reacts in a, I don't know, in an imbalance, and then the price keep pushing up, right? So you get a little bit anxious. You start thinking, oh my gosh, you start feeling FOMO, fear of missing out, and then you start buying in different zones, very far from your entry point, right? And I don't know, minutes after a news or just simply the market reacts, takes all the liquidity, you were trapped on that liquidity, goes to the prior or the first zone you marked at the very beginning and continues with the movement. All right, that's extremely painful. I don't know if that had happened before to you, but that, for me, that was extremely painful. It still sometimes hurts, but nowadays I just wait, and that's the key. Or I just let the price go as well, because sometimes the price may react to an imbalance here, which the imbalance was correct, and it simply do not enter again to the zone. It just like keep pushing up, and that's it. You need to be enough mature to understand that that's something that will happen in the market, and you need to be ready for that. And we're not ready for that unless we live that experience many times. Okay, inducement means that the price fails to reach our zone, but minutes after, hours after, days after, it gets to the zone and then pushes up. We're gonna see more examples in a minute, okay? All right, and this is a question we always have with this inducement type of liquidity, okay? So when will the price return to the inducement or the area? The truth is, you can never be 100% sure if the price will return to the inducement level or continue moving away. There are scenarios where the inducement plays out perfectly and others where they never comes back, and it's completely normal. It's just the market behavior, okay? We have to acknowledge that and be ready enough to understand what may happen in the price, okay? Let's keep moving. All right, then we have the next type of liquidity, which is called trend lines. These are my favorite ones to recognize where the money is, okay? Trend line plus an unmitigated point of interest, order block imbalance creates a high probability of mitigation zone, okay? Before considering an entry, there must be prior liquidity. Remember, this is one of the golden nuggets I gave you before. Prior liquidity near to the zone. This acts as a validation that the price is likely to move towards the area for the mitigation before continuing with expected direction, okay? So in this example, we are seeing here, the trend line is a bullish trend line, right? This is a bullish trend line. We have a range here. So strong low, a break of structure, and now we have here a weak high, perfect. When the price goes down here, people start seeing this trend line. So they say, okay, they see here 1, 2, 3. Also, people who likes to trade with channels, they put like this here. There's a channel. So they say that, oh, okay, this is a channel. This is an invalidation of the channel. Now we're gonna wait here to put buy limit, buy order. We're gonna wait for the results. What happened? They did not realize that all of that trend line or this channel structure is in a liquidity area, or this just cost liquidity. And what happened after that? All the liquidity has taken, and the price goes where? To the extreme, right? To the extreme in this example, to a decisional, to the real, where the point of interest is marked, right? And after all the liquidity is taken, or in other words, after all the price is efficient and the price has grabbed all or has drained the pockets of everybody, then it continues with the expected movement, right? We need to see this example tons of times, as many times as possible, so our minds start realizing that the market works in a different way we are used to see it, and we start like being more conscious of how this works. Okay, now here's an example of a bearish trend line. Same story. We have here liquidity. People will be trapped here. Trend lines are amazing to determine when the price may have a liquidity taken. And in this strategy you're learning, when we get to the trading journal part and all the steps to trade, liquidity is a must too in our list. So liquidity prior the POI, yes, correct. And now the liquidity is taken and we can be relaxed because it keeps going the direction of the market. Okay, perfect. Let's go with the last example of advanced liquidity, and it's called sweep or liquidity grab. This happens in all the time frames, okay? But this strategy, we see it practically in 4 hours, daily, and also weekly time frames. But it also appears in all of them, in all the time frames. Okay. So let's just read the definition, and then we're gonna see how it works. Okay. So a liquidity sweep occurs when the price grabs liquidity before making a significant move. This is typically happen at the beginning of an impulse, or within ranges, okay, where the smart money manipulates price to trigger stop losses and collect liquidity before moving in the intended direction. So in other words, this is a bullish trend, correct? This is a bullish trend. We already know that. Sometimes the price goes here and makes something that is called as a church. I haven't explained church here. We're gonna see it later, which is change of character. In other words, it's just like a candlestick wick. That's it. A candlestick wick, and with that the price just activates some stop losses or some orders. People start thinking, because this is a double bottom, right? Double bottom pattern. Okay, they will have a good result, but once it activates the order, finishes with the range. So takes the liquidity off the people, right? It happens a lot. And this is the other type of liquidity that occurs in the market. And I think it's not one of the most difficult to understand, because it's not that is difficult to see it because this is created in high time frames. It's difficult to see them, okay, and be aware when it's actually occurring. We're gonna see examples in a minute. All right, guys, so this was a theory, a lot of theory. Okay, so if you have further questions, my recommendation is watch this video again. I have to be very honest with you. I have portrayed on this presentation 100% of the knowledge about liquidity I know, and even more because I have given you the golden nuggets, or some tips that you may have in mind, which will, for me, this is like a shortcut, okay? Because all this that I have experienced through the market is because I did it, practice, and lose it. You can see these examples, practice them, be aware of them, and at least do not spend as many time as money that I did, okay, to validate this point. Revise the presentation, check the presentation again, the theory, and leave a comment, okay? Or just write me if you have any question. Homework. We're gonna try to identify 10 rangers or more in 4 hours time frame. Okay, sorry. No, I didn't update this homework. The homework is find 10 examples of each type of liquidity. 10 examples. So 10 examples of sweep or liquidity grab, trend line in the smart money, trend lines, inducements, and double tops and double bottom. Okay, so it's a lot of homework. If you really want to do this, you will do it. I'm pretty sure about it. Okay, now we're gonna see to the practical part of the class, and let's see more examples, right? Let's go. How's been the class so far? Cool, right? What is not cool? That most of the people who's watching this class are not subscribed to the channel. So please, guys, subscribe to the channel and hit the notification button. With this, you're gonna help my community grow much more. So let's keep watching the explanation in the market. Let's go. Perfect, guys. Well, let's go to the examples now. All right. So we're going to take as an example now a bearish trend line, okay? Because we haven't done too many examples with bullish trend lines now, or bullish ranges. So let's start with a bearish. We're going to mark very briefly here for strong high, and this will be the weak low. We already know that, right? I'm not gonna put names now. We already know, we're advanced enough. I'm kidding. I'm gonna put the names in a minute. Okay, so this will be the liquidity swing high. Then we have the swing high. We have here the swing low, and from the swing low, the liquidity is taken. Now we can see that this is a bearish pause, correct? And here, this will be our strong high. Perfect, very clear for all of us. Perfect. Now, then we will see here that this is the end of the range, which goes, this will be the weak low in this case, right? And we have here a swing high and a swing low. First, we have the creation of a swing low, and then we have the creation of the swing high. And the swing high, from the swing high, the liquidity is taken, and then we see a boss. Everything is clear so far. Now, we're just gonna see where are examples of double bottoms or double tops, okay, which means that it's liquidity. Now we're gonna mark here our Fibonacci tool to understand where is the premium and discount zones. We already see that this is premium and this is discount areas. Okay, now we're gonna try to find double tops and double bottom. Okay, but you will say, okay, Manuel, where are we gonna find them? Here in the discount area, or in the premium area, or in the discount area? We're just gonna see where the most logical double tops appear, and then is where you will see the liquidity. Okay, so if this is all the double tops are created in a downtrend, right? Remember, all the double tops are in a downtrend. So practically all the highs could be double top. So this is a top, and here will be a possible double top, correct? So we're gonna put here the next. The exercise is to put orders. Okay, orders in the trading view. You can do this. Why we are doing this exercise? We're doing the exercise in reverse, okay, because we just want to see where people put orders and where not to put us or orders. Okay, now this will be the first double top, right, at the market, and you will say, okay, Manuel, but now look, this is the discount zone, which means if we may sell, correct, because it's the selling area. I would say, yep, definitely you could sell there if you haven't paid attention to everything we have explained, right? Why? Because remember, we have in the exercises that we have done before, we have found the extreme and decisional areas, right? The extreme, the decisional zones, etc. But remember, let's try to do the exercise. This will be the extreme, right? This is the extreme. I'm gonna put it in red because it's a supply area or supply zone. Now we will have the boss. Remember, the boss is when we see a very clear reaction upwards the price. In this case, very clear and evident reaction upwards the price before the break of a structure, or after the breaks before the break structure, correct? So in this case, here we have the break of structure. So the previous point, which the market had a very evident attempt of going up, that will be our decisional. In this case, we could see that probably it could be this. It's not so clear. We would say, okay, maybe it's this one or not, right? Can you see this? Can you see this beautiful candle here? Candle wick? All of it could be our decisional. Why? Because in a certain point the price goes down, then it pushes up. Let this candle wick and they break the structure. It will be better that it will be a complete candle. Yes, definitely. But we're just gonna take it as a part. Okay. So this will be the decisional, and if you see, it had a reaction, right? So what does it mean? Now that we already know what is the decisional and what is the extreme, all the tops that we see here are incorrect double tops, points to put an order. Okay, so here will be another double top, another high, another double top. The most interesting thing is that when there's like many people putting double tops in these areas, the price has extremely hard reactions, very hard. So it's like the price takes the liquidity of everybody, or takes the money of everybody very quick. So it's like those type of orders which you have put it and you expect a result and you just simply lose all your money. I know you have lived that. I have lived that before as well. So this is it. This is to be like incorrectly stand in the market or stood in the market, right? Incorrectly stood. Double top mitigated, double top mitigated, another double top mitigated, another double top mitigated. So all this, because this is remember, this is a bearish range, correct? It's a bearish range. So that's why all the double tops that are here are incorrect. Probably if you put a double top here, it might go well here, but it's because it's in a decisional zone. It's not because of the double top per se. It's because of the decisional zone. And I'm pretty sure, because I have experienced that, once you have lost, for example, how many orders here so far? Once you have lost 1, 2, 3, 4 orders, you see here the double top and you don't put it because you're emotionally so drained. You are exhausted. Even you don't have money to put the next order. So you wait for the price to do this pattern. Say, okay, no, probably when I keep buying. and then you keep buying. And particularly in this case, it went correct. But if you like start buying in this point, no, right? So this is why. Okay, perfect. So we have done the exercise. We have already checked for double tops. The idea is now you check for double bottoms. Right now, in this nice example, we can also see the most beautiful and the one I like the most, which is called not the second one, but the third one, which is called trend lines. Okay, let's see examples of trend lines here. Trend lines are also interesting to see. So again, we already have marked our decisional, which is clear there, the decisional. We're happy with our decisional. It's already well marked. Perfect. Now, let's see how people may fall into the trap of the trend lines. Now, remember that the trend lines occur when we put when people start looking for triple touches, right? So for example, we start from the very top of the impulse. Here is the trend line. So we have point number 1 here. I'm just gonna highlight them so you can see it with me. Look, this is the point number 1. People expecting their result. So okay, from there it starts, and people put here, okay, base the second trend line point, and then here everybody's selling here. Sell. What happened after the sell? Boom, the liquidity is taken. People is putting sell orders here. Liquidity taken, liquidity taken. With this candle takes all the liquidity, and that will be an incorrect trend line. Second trend line that we can see here. And you see it here? Here's 1, here is another 2, here is the third one. So again, here is another triple touch trend line. I don't follow that. I just put the trend lines to see where the money is accumulated. So for example, if we're executing orders and you want to put a trend line and a sell here, but you realize that this is the third point or the third touch of a trend line, there's a high probability of losing money. High, very high. And look what happened here. That's why the price breaks this with that trend. First of all, there's many people who would say, okay, look, this is a confirmation. Trend line, downtrend, and then we have a double top, double confirmation. Yay, let's sell, right? Has you ever lived that before? Me as well. That's why sometimes I mock about this, but it's because I have also fallen that trap many times. Look, next trend line. So look, 1, 2 here, 3. People say, okay, in the third one, people were like very excited, like, oh, this really works. This is really nice. After this movement, they will wait for keep pushing down. And then they will see a fourth movement, a fourth touch here. So they say, okay, this is the fourth one. So it will be even stronger, right? Keep pushing up, right? All of this that I'm saying is because I have lived that. So it sounds like a joke, but it's an anecdote. So here it is. 1, 2, 3, trend lines. All the trend lines has been broken so far. Again, because people were like selling, first of all, on a discount area. So if you are selling here, of course, and you don't know this strategy, well, I could understand it, right? You don't know the proper concepts, but okay, it's incorrect. Okay, so this will be the discount. This is the discount area. So you have to buy here, not to sell. And in this part, you can sell, but just in the correct points, like in this, in the decisional, which actually has a good reaction, which was this one, small one, but this is still good. And well, the price just simply changed the direction, but it's normal, it happens. Perfect. Now we have seen 2 examples of double tops in these examples and trend lines. I'm gonna use some examples that I have here about inducements, so you can have a clear pattern or a clear image of how it works. Okay, right, this that we are seeing here is my trading studies. This is all the examples I have done just with inducements, right? And I encourage you to do it. It took me that long to do it because I'm not a very smart person, but I'm very perseverant, right? I have to do plenty of examples and then I could have a good result. Now I can show you the studies I did, and I can show you now an example of an inducement. For example, look at the next. Look, here we have liquidity taken, then we have here I'm gonna make it a little bit fast. This is the swing high, swing low, then we have here the boss, perfect boss, and then we have here the higher strong high. Sorry, even though this is not the strong high is this one, and this is the liquidity is here and here. Perfect. Now, what happened here? So the price respected this, which was an order block we have here, and in this order block, look, this will be the inducement. So the price comes up here. Remember that the inducement is when you want to see when the price do not reaches the zone or fails to reach the zone we were expecting to reach and goes down. It starts like having like another market shift downtrend. You get a little bit anxious, and then what happened? Look, just Look how many candles the price did here. Look how many hours passed. I think it's a 1 hour example. Yes. Look how many hours the price do this. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles, 12 hours. And then look how fast it went back to the inducement part. 1, 3. With 3 candles, took all the liquidity of the people who were selling here, had a good reaction. With people, when people see these 3 huge candles, they say, oh my gosh, now we have to buy. And then with another 3 candles, liquidate everybody. This is how it works. Okay, this is a great example of an inducement. All these examples, I'm gonna put it here. All these examples, all the links of my previous studies or more examples, I have put them here and under the link of in the material of this video, so you can see all of them, practice with them, and more. All right, here is another example of inducement. Can be the one I just showed you, and also can be like this, a small trend line. So again, we are probably this is what time frame is this? What is the time frame? $10 it says. Okay, perfect. This is an example of reaction in an order block. This order block may be a decisional. It's not a correct range. Maybe in 5 minutes it could be a range, a complete range in 5 minutes, right? But it's not so clear. Apologies for that. I was learning. But here, example of inducement is very clear. Why? We have marked here the order block, which is this one. This is the order block that has the zone. Now look, the inducement is here. This is inducement, this is inducement. And also inducement make a trend line. People may expect it to buy here, and then it came to the correct price or the correct order block, and then it keep pushing up. So this is what I want you to see. This is what I want you to look for the market. In fact, in this example, there is another example of inducement. Pay attention to the next. You see here, this is the strong low now. Strong low, perfect. Then we have here a break of structure, which will be this one. You're already good at analyzing this like me, right? And here is the swing low. Swing low, swing high. Oh, sorry, this cannot be the swing low. I'm so sorry. It will be this one. Okay, good. So why this cannot be the swing low? Okay, here we have a clear swing low, but the next thing that should appear here, it will be a swing high. But here is not a swing high. So this swing low is not correct, it's not valid. So in that case, we have to select the previous one. And in the previous one, we have the next. We have this, maybe the swing low, and then we have this as a swing high, but this does not exceed the one of the right, neither the one of the left. The one of the right, yes, but not the one of the left. So this cannot be a swing high. So we have to go up. So this will be this one here. Will be the swing high, and this will be the swing low. Easy, clear. Trading must be clear. All right, now we have 2 zones, which is this one, which will be the order block or the extreme, right? Perfect. This one will be the extreme, and then we will have to select, remember, the decisional. So the decisional is the very clear attempt downwards, right? Very unevident downwards before the break of the structure. So here is the break of structure. Before of this is the candle of the decisional. Perfect. This was a perfect example of a decisional because it entered here perfectly. But look at this. It's inducement, right? So at a certain point, all of us were waiting for the price to get to the area, very anxious, waiting for the price to get to this place. But what happened? It go up, keep pushing up. People start like selling or buying this point very far from their actual entry point. And what happened after that? The price took all the liquidity, took the liquidity of the people, and then enter in the correct zone. All right. This is a matter of keep practicing practically every day, guys. Every day we have to keep practicing this, right? And then little by little, we start like getting more used to the change of the marker. Okay, the market. Nice. Now let's see examples of liquidity graphs. Okay, and with that we will finish. Now let's see an example of a liquidity graph. Look, we have here this. In this example, we can see that the price is a bearish trend line, as we can see, very clear, correct? And now in this bearish trend line, the market get to this order block. Here is an order block. Here it is, right? Here is the order block, very clear. Now, what happened after this? Oh geez, what happened after this, my friends? The price entered to this zone, and then it makes a liquidity graph. What is? It's just like when it creates the swing high in this example, or on the swing low. This is the liquidity graph. In other words, you just take the liquidity of the swing high to keep pushing down, okay, or to create a strong low, a strong high in this case, strong high. Okay, liquidity graphs, as I said before, are clearer in high time frames because it's when we see properly when the impulse starts or the range starts. Okay, and let's say that this is not really difficult to comprehend this type of liquidity. However, it's important because with that we reinforce when a range starts or when an impulse starts. Okay, I will have more examples of this type of liquidity here on the video. I think this video is long enough. You have plenty of things to think about liquidity. Make 10 examples of each one of the type of liquidity you have learned today. If you have further questions, please do not doubt and ask me. And I'm so happy and excited to teach you this. This is very important. And when you get this, when you interiorize this type of knowledge, you will see a market completely different. And you'll be so fulfill on yourself to realize when the market works or when it doesn't. Perfect, guys. So this will be all for today's session, and I'll see you then in the next video, right?